Today on the podcast, we learned that I have a twin brother named Christian Bowles. Christian is the National SBA Sales Manager at Credit Bench, powered by First Home Bank, which is insane considering Christian's only been in the SBA industry for 5 short years. A lot of similarities between Christian and I. We're both 32. We both recently took on sales management roles, and we've both been hired by Tom Zernick at one point, who I think is arguably the best SBA sales talent picker in our industry. So stick around to learn more about how Christian has propelled himself to the top of our industry in record time. Christian Bowles, how are you doing, man? Thanks for joining. How you doing?
I'm doing well, Ray. How are you?
I'm doing good. You just made a pretty exciting move. I'm looking forward to talking to you about that. National sales manager over at Credit Bench by First Home Bank. They're based down in my neck of the woods.
Absolutely. Based in St. Petersburg, regional presence over in the St. Pete, Tampa, Sarasota area. But the bank itself, 2 strategic national business lines, mortgage, loan origination offices across the country, and then obviously the SBA lending division that goes by Credit Bench.
Yep. Yeah, they rebranded it a little bit a couple of years back. I've got some buddies over there. You're in good hands, so congrats on that move. I want to get to that in a little bit, but I want to take it back because when I met you, you were at Q2. You were there for a number of years, 5 years or so, I think. And how did you land there in the first place? Did you have any SBA experience before you got there?
No, it's funny. So, like just about everybody else that I talk to in the SBA business, and curious if you're the same way. One of those things that just kind of fell into. I did not grow up with the excitement as a kid that I was going to be an SBA lender when I got older. And I was actually in the financial advisory business, had a decent sized niche in the small business 401k space. And the CEO of Q2 had actually just founded Q2. That was a second iteration of a SBA lending division that had previously sold and then restarted. Got introduced to him, started having coffee because we were basically prospecting the same clients. I was working again in the small business 401k space. He was doing SBA lending, so wanted to network with him. After about a year meeting with him, John Handmaker, who was in the SBA industry for about 30 years.
I'm sure a lot of the audience knows who that is.
Yeah, absolutely. So John one day asked me at coffee if I'd be interested in joining Q2. And I jokingly said, well, John, I don't even know how to spell SBA, much less the first thing of commercial lending. And similar to the investment advisory business, he kind of laughed and chuckled and said, hey, well, there's really not a ton of young people in the industry and entering the industry. It's an aging population. Love to bring somebody young in, teach them the ropes. People go from bank to bank. You basically have to retrain those people, the new policies of the bank, new procedures, new credit box. But what they got to do with me at a young age was mold me and kind of build me from scratch. And so had an opportunity to basically work under one of our biggest producers out of the Chicago market for a year or two, and then had the opportunity to get into originations myself.
Okay, so they literally just taught you how to spread numbers and how to analyze a deal and all that. They just took you under their wing and just showed you. That's amazing.
Yeah, so everything from spreading packages, things to look for. Obviously, one of the beauties about being a generalist in this industry is you see everything from daycare owner, trucking company, manufacturing company. You kind of see the whole gamut of the small businesses that are in this country. And so, you get a real insight into all the different industries that make up the backbone of the small business lending space in the US. So it was pretty neat.
So how'd you go about building up your own pipeline once you got into the sales role?
Oh gosh. So that was just a lot of cold calling, cold emails, a lot of LinkedIn searching. One of the things that I learned very quickly was if I did any direct to consumer marketing, or what I would call direct to consumer marketing, direct to our end user, end customer, I'd be probably knocking on or calling about 1,000 people before I got one opportunity. And so what I learned very quickly was I needed to establish referral sources and COIs that were constantly talking to small business owners and people that I wanted to work with, right? So we were really doing a ton of commercial real estate purchases, business acquisitions, and franchise lending. And so I went out and started meeting with commercial real estate agents, business brokers, franchise consultants, calling on just about everybody I could find through LinkedIn, trying to network in different cities. We were a national lender at the time, and still am a national lender. I've always been a national lender and had the ability to lend in all 50 states. And so, just being able to pick up people that I saw were being successful in those different areas, commercial insurance agents, anybody that I thought would come across an opportunity and kind of be on the lookout for me when they were looking for businesses, talking to business owners. I could tell them what I did, what I could provide, ways that we were different than traditional banking, and just have them kind of market for me in a way.
Right. Yeah. Because I'm thinking, as you're first starting out and you're, 26, 27, 28, and you're going out to these commercial real estate brokers and you're asking them to trust you with this huge transaction that, they only get paid when it closes, and it's probably the borrower's biggest transaction of their life. And at some point you had to do your first loan. And how do you go to them and actually get them to trust you? What did you say to these folks?
So a couple different things that I learned real early was when I was young, still am young, but early in my career.
People are watching this saying, oh my God, really? We're like 32, right? Yeah.
Right. So, I mean, early in my career, one thing that I learned very quickly was I could offer people time, right? So time and service, and the ability to work on their deal, make sure that it was getting the proper attention. I had the time necessary to make sure they were getting an experience that other people weren't providing. If they were going to somebody that had been in the industry 15, 20 years, that person was working on a plethora of deals, couldn't devote the same time, attention, detail. I would really walk through the entire process with my borrowers, still try to do that. But one of the things that I tried to push and impress upon them very quickly was my service level was going to be second to none because I had the time to do it. And so, I put the time and effort into really making sure that my borrowers felt, appreciated. They were getting the right information. I was helping them obtain critical information, especially when it came to underwriting, closing, understanding the why behind a lot of why we were asking for something, making sure they really understood the process, and giving them that extra attention to detail, I think, was a big help.
That's a really good point. But then it started working. And then don't you not have time once it works and you have a big pipeline of deals and now you're really busy? So then what did you do?
It is. Yeah. So then you really have to try and delegate, okay, what is worth my time? What deals can I work on? At that point in time, you really know, especially if you're at the same institution, what works and what doesn't. And so trying to weed out opportunities early that you knew were just going to be fights or they were going to be uphill battles. Try to weed those out, take on opportunities that you knew were going to be successful. Everybody's got a finite number of, hours in a day. And so trying to make sure that you're managing that time properly. One of the other things that, I think helped with the success that I had in my career was, fortunately or unfortunately, I'm always available. I try to be available as much as possible to both my referral sources and my customers. And so somebody calls at 8:30, 9 o'clock at night, has a question, shoots me an email. I really try to make sure that I go out of my way to take care of them, because I think it's the extra special touch, that availability that helped me generate a lot of the early business in my career. And now people understand it a little bit more. Hey, it may take a little bit to get back to you, may not be able to take that same call at 8:30, 9 o'clock at night, but developed that rapport with them that they know they're going to get taken care of.
Yeah, no, that's right. I mean, it's a really good point if you're just starting out, because I'm at this point very picky with what the deals I take on. And this is common in all sorts of industries. And so if you're starting out, you might have to do the more complicated transaction or the smaller deal to try to build your business. So I don't think I've ever heard anyone really explain it that way, but that makes perfect sense. And it did work for you, and you were able to kind of navigate your tenure over at Q2, and you were one of the top producers. On your LinkedIn, it says President's Club Award 2020, President's Club Award 2021. What is this club and how do I get in?
So President's Club at Q2 was for business development officers that produced over $15 million worth of 7A volume. As you know, 15 million puts you, in a top tier of SBA lenders. But, I was able to do in 2021, 33 million, which was a huge feat, and was the top producer at Q2 last year. It was a lot of loans. So, but that's President's Club.
So you ended up going in a know-nothing kid, and then I guess in a way surpassing, at least in production that year, some of these people. And are they looking around like, how is this kid doing it? What were you doing that made you more successful than other people, like on a day-to-day basis?
Just grind. Really, at the end of the day, it was I was reaching out. I was trying to make new contacts every week, never satisfied with my current portfolio of referral sources, always trying to make new connections, always try to look at new opportunities, try and figure out ways that were going to be profitable to myself, figure out, really what the bank wanted to do, deals that were getting underwritten and closed fairly easily, try and go after those transactions. But really what propelled a lot of the success was just, and it felt like an absolute grind for years, but just reaching out to people, whether it be through cold calling, cold emails, cold LinkedIn messages, trying to let them know that, I wanted to be here as a resource, but also that I felt like I was able to do something that they weren't currently getting, which is, that extra level of service, to know that them and the client is ultimately taken care of.
Yeah, I hear that. And so, and by the way, I don't want to say you're like my twin. I mean, we don't look that much alike, I guess, but I mean, I'm just seeing you say a lot of things that resonate really well with me. It's just a lot of similarities. And now Tom Zernick has hired you. Tom Zernick gave me my first 7A job. He's like the best identifier of talent. You have a fire in your belly. I had fire in my belly when I was 23 when Tom found me. I guess I still kind of do. You're not starting a podcast, are you?
No podcast, but definitely believe that Tom Zernick and his leadership is second to none. Obviously, what he's been able to do at First Home, I have a lot of respect for Tom. He's one of the main reasons why I am in the position that I'm in, was when I met with Tom and really figured out what he wanted to do with the bank and the SBA division. Just a class act, and really have a lot of respect for him.
Now you're a successful BDO at Q2. It seems like you're kind of moving somewhat towards management. I mean, if you're a national sales manager and you're still producing, I think, but why would you want to go into management when you just created, such a sweet deal for yourself? I mean, you're making money, you're a BDO, you don't have to answer to anyone. Half kidding. Why would you do this to yourself?
Yeah, I mean, a lot of people ask, you're making good money, you're doing, you're just responsible for yourself. Every decision that you make is really just only affects you. And you don't have the headache of managing other people. So, I've always had a desire to get into management. I have a long-term goal to run a division one day. And I think that this is a good step to get there. I really like helping people. It's part of one of the one of the reasons that I got into the industry, whether it's helping the customer, helping a referral source, helping my peers, really trying to, I consider myself more of a problem solver than an SBA lender. And really that's the way that I try to look at my business. And so, getting into that management level, I get to solve a lot of problems, whether it's helping some of the BDOs try and structure deals, figuring out ways to overcome obstacles for the customer and get the loan done that's, good for underwriting, good for the bank, but also good for the customer. And so, just a unique set of challenges that I like to do and take on, and something that I'd always had an interest in.
Well, I asked just so that that's the question probably a lot of people want to ask, but I knew that answer because we're twins, like I just said. And so I just took on a similar role here. And I have been asking people on the podcast for the past year, knowing I'm going in that direction as well. Should I do it? What's, I just wanted to learn about it. And yeah, virtually everyone said, no, don't do it. It's horrible. And I did it anyway. And, now I'm going out and trying to, recruit some videos to join the team kind of in a player coach role. Now you brought some friends with you though. Like, so
I did.
Do these guys work for you? Are you their boss now?
Technically, yes. I like to use the word with. I don't want to sit here and say that, they need to turn over call logs to me. I have a lot of trust in the people that I work with. They're very successful BDOs on their own. I know that I don't have to babysit them. What I really want to do is help them be more successful and, use skills that I have to help them, originate more deals, get more deals approved, get more deals closed. And ultimately that leads to a happy work environment. But, I hate to use the word for, I prefer to use the word with, because this team works with me. But Brian and Brandon, the two gentlemen you're talking about.
Did Brian tell you to say that?
No.
What if Brian doesn't cut it and you have to cut him loose? What are you going to say? Let's do some role play.
25 years in the SBA industry, with a heck of a niche within the real estate market of San Diego. I got no worries with him in the world. Not a one.
All right, fair enough. So let me ask you this. You've been national SBA lender, which is a different kind of vibe. I'm there with you, versus the local, bank. I can only lend in Florida, whatever, just different things. And I'm just curious, like, because obviously you had to vet First Home Bank just as much as they had to vet you. And Q2 was successful as well, had a good reputation. And so, like, what are the 2 or 3 main pillars that a national SBA shop needs to have in order to be successful, do you think?
I think the biggest thing is buy-in from your executive management team and even your board of directors. You have to have the buy-in from the executive team and from your board of directors that a national lending program is something that you have to be interested in. You can't be half in, half out. You're either all in or you're not in at all. And I think that's probably one of the biggest pillars that I personally think you have to have, because if your executive management team and your board of directors think it's good in theory, but when you start doing deals and, that loan in Portland, Oregon goes bad, or, that loan in Chicago goes bad, and, they're not accustomed to not being there when that happens, things can get kind of squirrely. And so most banks, as I'm sure you've seen, that go from regional to national, most of the time it doesn't really work out because they're so used to doing deals in their backyard, meeting that customer face to face, getting that entire banking relationship, walking down the street, seeing them on Saturday at a coffee shop. That obviously doesn't exist in the national brand. And you have to be comfortable making those deals outside of footprint. So I would say that's probably the biggest pillar. The second biggest pillar, in my opinion, is just understanding risk, making sure you've got a good, tight, cohesive relationship between, whoever runs your production and the people on that production team, your underwriting, manager, chief credit officer, the underwriters. You got to make sure you're going after the right deals that you want to fund and you want to do, because a BDO can bring in, 20 different deals, but if the bank's not interested in them or doesn't want to do them, it doesn't do anybody any good, right? So you've got to make sure that you've got a cohesive relationship between production and credit, because there's going to be a lot of things that, markets are different. California versus Georgia, massive difference. Specifically, if you look back at, COVID and what that created and the environment by which some states were wide open, businesses were able to, operate as normal. And then other situations where you had states that couldn't. And so, making sure that you have that knowledge base is big. So those are the things that I think, if you want to be national, you got to have the commitment from, the entire team, specifically your executive team at the bank level, and then your board of directors as well.
Are they flying you out to do site visits?
We had a site visit policy. It's in the process of undergoing some revisions, being able to use, I mean, if COVID's taught us anything, it's technology is, almost just as good as being in person. I mean, I got off a call this morning with a business owner in Palm Beach, Florida. We were doing an underwriting call.
It's right here.
And yeah, exactly. And, we were doing an underwriting call, and the three of us, myself, the underwriter, and the business owner, got on video, and we were just chit-chatting like we were in somebody's office. And so, I think if COVID has taught us anything, it's that we can leverage technology so that, we're able to accomplish more and not spend our days, flying all over the place and being
Absolutely.
out of the office and losing production.
I mean, well, we use a third party for the actual site visit physically. And then if you need to get a feel for someone, we're doing that right now. I closed a deal, nice warehouse purchase, literally one exit up the street from me here. And the guy actually lives in the neighborhood over here. And I never met him in person. I zoomed them like this.
What's funny, I didn't go to my first closing until probably 3 years into my origination career. It's the first time I attended a closing.
I don't think I've been to a closing in possibly 7 years.
I've only been to 2, so
it's weird. Yeah, it's weird. A lot of bankers go to the closing, bring a gift, take them out to dinner. I'm like, I'd be at 3 dinners a week. Come on, like, how do you do this? I mean, you can't be efficient, high volume. I mean, it's just a different approach. I'm not saying there's anything wrong with it. It's just a different approach. Now, are you going to be taking advantage of the unlimited PTO?
The unlimited PTO, right? So if you ask my wife, I don't vacation well. I go places, but unfortunately, again, it's just one of those things. It's kind of that nature of
you're sick. You're a sick man,
right? I mean, I take calls, I email. If I want to truly unplug, I need to go to the Amazon rainforest. I need to go to, a Caribbean island that doesn't have Wi-Fi. That's where I would utilize my PTO and unplug. But good, bad, or indifferent, it's just not something that I can do for an extended period of time.
I try to unplug once a year, and usually it's between Christmas and New Year's because that's when it's the easiest. But I'm the same way. When I'm in Mexico, I take some phone calls and, do a little work in the morning. It's not a huge deal. But the worst example of this I've seen was, first of all, there was a deal that was it was like blowing up for no good reason, really. It was a warehouse purchase in Miami, and the guy, we needed a translator, so I didn't actually speak to him like directly. He spoke mostly Spanish, but he was buying a warehouse for his gun business, and like a lot of banks don't like to lend to gun companies or gun deal. It was an online gun dealer. Now I'm thinking about it, it actually sounds kind of sketchy. It's like Craigslist. Was he selling on?
Right.
No,
yeah.
I think it was eBay. But anyway, the broker. So we're trying to put out this. He's basically like, I don't want to get property insurance for my inventory. We're like, well,
interesting.
That's a weird one. And we're like closing tomorrow. So I'm in Disney World on the phone, and I'm thinking that's bad because I'm at Disney World, the happiest place on earth, and I'm having to deal with this. The broker was in the delivery room delivering his second child, and I'm hearing a baby be born in the background while we're talking about this deal. I'm like, dude, you gotta draw the line somewhere, Christian. I really hope that's not you in the future.
No, hopefully that's not. I mean, I can do it for a couple hours. Don't get me wrong, I can take an afternoon here and there off, but extended period of time, it's just not me.
It's very common for high performing people to not turn it off. I mean, I can't turn my brain off at all, just at all. And, you see an email, you're looking at the email. Hey, I'm not doing anything. I'll check the email. It's not a big deal. Like I do a lot of podcast stuff on the weekends, it's just, if it's not like work, if you love what you do, I know it's cliche to say, but it's not too bad if you love it, and it's like in your head, you're seeing you're building something and you're getting one step closer to your mission of building, and you can see that growth. And so it's motivating and you just want to keep going. So it's intoxicating and it's addicting. And I fully understand, because we're twins, what you're talking about.
Absolutely. Well, I think the other hard part too is being in an industry or a role where you're highly reliant upon, commissions to have, increasing in compensation. This is what I tell my customers all the time. I don't get paid if the deal doesn't close either. So, we're on the same side of the table, when it comes to, driving towards getting that deal done, because, the bank's not going to pay me a commission on a deal that doesn't close. So, from that perspective, I think it's one of those things that kind of goes along with this. And I think what you're talking about, what you typically see in high performers is, there's that inherent, this is going to help me be successful. Obviously, going to enhance my compensation type scenario.
Yeah, it's like an intrinsic motivation to just succeed and be successful. And it's just built in, and I can't get it to stop. I have no desire to take a year off and go on an island or anything like that. I just don't. Where does yours come from? Like what in your life you think most defines what this sort of intrinsic motivation has been for you?
I think it's just something that, as I've grown my career, again, I really like helping people. I really like solving problems. At my core, I like to be a problem solver. I like to be able to provide solutions to people, that come to me frantic. Hey, here's my problem. How do I get it done? Whether it's through structure or, maybe in acquisition scenarios, you get a lot of different components, trying to figure out what comfort level is, especially between the underwriter and getting a deal approved and what it's going to take to get there. All of that, is something that, just keeps me hungry and coming back for more, I think. And so, just that drive to be successful, but also just to do what I love. I could never take a year off and sit on an island. No way.
So are you going to hire people at some point or now?
So we're looking to build out, the national lending team. We currently have Asu, who is an originator, woman in the Baltimore, DC market, really strong past SBA experience. Asu is a phenomenal producer in that market. As you previously mentioned, Brian McClendon, who's in the San Diego market. Brian is a great real estate BDO, trying to expand his horizons a little bit with some other deal types, but a heck of a producer, when it comes to real estate. Brandon Prather in the Louisville market, big background with US Bank prior to Q2, kind of plays in all different spaces, kind of a BizAc, lender. And then looking to onboard a gentleman, up in Pittsburgh, and then looking for other strategic markets that we can play in.
Wow, you're really hitting the ground running there.
We are, really trying to. One of the things that really attracted me to First Home was just the commitment to the SBA division, specifically the commitment by, Tom Zernick, who's president, and then Tony Leo, the CEO. Their commitment to the SBA division, but also their commitment to growth. One of the things that Tom just drives home is we got to grow the business. And to me, that something that I love to hear, especially from an originator standpoint, is when the president comes up and says, we have to drive production. We've got to create volume. We've got to originate. We've got to underwrite, and we've got to close. Obviously, we got to stay within the credit box and make sure we're originating, underwriting, and closing strong deals that are going to perform. But to drive that accountability level and to drive that level of production is something that was extremely attractive to me when I was looking at First Home. Obviously, they finished the fiscal year 2021 SBA fiscal year at about 200 million, put them right at top 30. First quarter rankings came out, top 15. So desire to stay on that top 15 trajectory, finish the year within that top 15 number. And so, as I look at the bank itself and just the pure commitment to the SBA division and specifically growth, it's very exciting.
In those two markets that you're hiring, were those your hires? Did you find those people?
Yes.
So what do you look for when you're hiring someone?
A couple different things that I look for. Obviously, what everybody's looking for is high volume producer, right? I mean, it's very attractive to bring on somebody doing 15, $20 million. But I also try to really look at their pipe and understand where they're getting their deals from. If they're in a more bank environment, are they self-sourcing deals? Are they getting internal leads? One of the biggest things, and I think you'll probably agree to this based on your background, but not having any branch referral networks is a very different ballgame than the self-source. So having, one of the things that I look for is how reliant is the business development officer on sort of internal banking referrals versus just out beating the street self-sourcing. Really looking for those self-sourcers because I know that long-term sustainability, I mean, they can go anywhere, right? I mean, their relationships can take them anywhere. So they're going to be successful no matter where they go.
Well, good, man. Well, I'm happy for you. If you're ever in the neighborhood down here in Florida, you let me know. All right. I'd love to catch up with you again. But thanks for coming on.
All right. Thanks, Ray. Really appreciate it.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.